Hello everyone, welcome to my webinar. Uh, this webinar we are going to go through each and every component of our research report, and I'll be giving you highlight on an explanation on each and every component which is in the report and what all indications you will be getting in the report. And so at the end I'll make sure that you understand that report, and it should be useful to you, and it should be you should be able to use it for your so this report will add value to your trading. Okay, so let's start. Before starting, I'll just assume that this video who all are viewing have basic knowledge of stock market and trading, how to trade in future and options, how it works, as in how to place orders and stop loss and uh, all that thing. Okay, and one should have a basic knowledge of technical analysis as well. Let's say to load the chart, to see the chart trend and everything. Okay, and rest everything is there in the report. Okay, you don't need to do anything as such, but just you need to have some background of it. Okay, so yeah, so the process of this reports is, as such, we are getting the data from NSE and Google, and then this data is converted into the information by the information system based on some known technical theories which we'll be going through in this presentation. And after this there's a we scan the stocks, all the 250 to 220 odd stocks which are there in future and options, and based on that scanning, so we then arrive at a list of stocks where some technical indications are there. Okay, so let's say we will arrive on 30 stock of a list of 30 stocks where there is some pattern is formed or some technical indication is there. Okay, then you can basically pick up your trade from that list. Okay, you can filter out from that. Okay, so this is totally automated. Okay, so there is no manual intervention in the scan. Okay, and in the report generation, so it's up to user. From that list you need to filter out, you need to pick up the trade from that list, and you can take your call. So quickly, the highlights of the report. What all is there in the report? There is a volatility indicator, which is Bollinger Bands and average true range, Fibonacci retracements, weekly, 3 months retracements, pivot levels, volume weighted average prices, peaks, bottoms, gap analysis. We'll go through it, what it is, and derivative option analysis and indications. So in the derivative side, what is happening, we need to know that, because a lot of indications you get from the derivatives positions which are built up by the big players. Okay, so we need to understand that candlestick patterns and possible levels. So based on the candlestick patterns formation, it will be highlighted, it will be given that this particular stock has formed this particular pattern, and based on that pattern, these are the possible levels in the upcoming trading sessions. So uh, over and above that, we have shown 6 months candlestick chart and RSI below all these numbers, because visual presentation is very much important with these numbers. So whenever you go through numbers, okay, that is fine, but where these indications you are getting on the chart, okay, you need to look at that. So let's start with volatility indicators. Bollinger Band. Bollinger Band is a volatility indicator. It measures stock volatility. Okay, the up and down, the range of the stock, it measures that, and based on that, the bands are formed. It on the basis of 20 days moving average line, Okay, let's say the 20 days moving average line is 500 for a 5, 500 rupees stock. Let's say the 20 days moving average is somewhere around 510. Okay, and the volatility number comes around 20. So what does this mean? That the upper band is of 530 and the lower band is of 480. Okay, 490. So so in short, I mean to say that these bands are the range of the stock where it can move. Okay, whenever stock is about 20 days moving average, it is into the positive territory, and below it, it will be into the negative territory. So this all indications will be given in the reports. You need not to go and check where the prices are. This will highlight where the prices are. How? We'll know. We'll just have a look on some screenshots, some snapshots. So on my left hand side, all these orange bands are the negative indications. Like say negative indications means if this stock has closed below this price, which was the 20 days moving average, the middle line basically. So this will highlight, giving you that it has closed below middle band. Okay, so similarly closed above middle band. When it is near upper band, it will give you indication. Near lower band, it will give you indication. So near upper band, it may take a resistance, or where it is there in the chart. Is it near upper band, and is it trying to break out? So if the bands are very narrowing and it is giving you that it is near upper band, means the bands will expand and it will break out. Okay, so at that time you need to be careful, like it will not, it might not take resistance there, but it will break out from that range. So you need to see where these indications are in the chart. So if it's near upper band, and it's actually the bands have expanded, means the range is very high, the bands are very high, and and it's on the peak. Okay, then it might take resistance there. And similarly, if it is above the upper band also, means unexpectedly gone above the band, too bullish sentiment, then it's overbought. That is the overbought zone. Similarly, that's a if it is below the lower band, if it is lower, oversold. Okay, so these all indications will be given. You need to check this with other indications and other indicators to conclude something and take your call. Average student, this is again a volatility indicator only, but this takes into consideration the total range of this um, day. Like say Bollinger Band, while calculating the volatility, it takes open and close. This takes the true range, the high or low, or the open or low, or the close or low, whichever is higher. Okay, whichever is higher, it will take into consideration while calculating. Based on that, okay, this average student will basically show you the peaks and bottoms, possible peaks and bottoms. What the theory says is, the whenever there is a highest volatility, the bottom is near. We are near to the short term bottom. Okay, and whenever so based on that volatility, we have identified the peaks and bottoms, and they are automatically calculated. Backend calculation is done. It will be plotted if there is some top out or bottom out indication is there, and like this it will show you like this, top out and bottom out. Understand one thing, this does not mean you have to go and sell next day, go and short immediately on the next day. These are not the buy and sell calls. These indications are basically to tell you that if you are long on the stock, And if you see this top out formation, then it tells you that the top is very close. Okay, it might be very close. In next 1 or 2 days, it might form the top, because this is where the rally is exhausting. Like the follow buying is not coming, and it's exhausted. Okay, and similarly, bottom out means whenever stock is uh, whenever stock is uh, uh, at it the volatility of the stock is at its peak. Okay, then that is where the bottom is formed. So whenever there is a bottom, you need to think that whether should I hold my short positions or should I close. So ideally, whenever top and bottom forms, it tells you the indication that these are the probably short term tops and bottoms. Okay, retracements. So retracements are nothing but based on the previous highs and lows. Okay, these are the extensions as in if for example the previous high low is 500 and 580. Now in coming week, if stocks breaks the previous high of 500, how much it can go up, retrace. Okay, so that levels will be given. Okay, and so like this it will be given, and like this 100% means it is a previous week high. Okay, or previous whatever time period of retracement it is the high of that time period, and 0% is this is a low of that time period. Now the stock will retrace in between this, or it will cross this high and retrace higher. Okay, so whenever it closes below 61.8%, 38.2% is very close. This is likely to come. Whenever it closes below 38.2, 0%, it will retrace to the previous low. Okay, and uh, so similarly, these orange bands means it has closed below these retracement levels, and the lower levels might come. Okay, similarly, the green means the positive indications, like the stock has moved up and closed above 50% retracement, and the 61.8% retracement is likely in the coming trading sessions. And if there is no closing above some levels, and if the stock is just moving, it will show that this is moving in between this and this. Okay, this is the range of the stock where it is moving. And similarly, if it closes the prices closes above 61.8%, it will show you the green highlight, and this means there are the chances of going towards 592, that is 100%. This is nothing but the previous high. So this you see this kind of indications also be given. This means the stock was above 3084, and it has all the way fallen down to below 61.8%. It has given closing below this level. This is the clear weakness. So next, what is the level? So 38.2. This is where the stock should ideally take support. If it is has closing below this, given closing below this, so it will touch. It might take support at 38.2% retracement, and below this it will go to the previous low. And similarly, if the stock is closing above these retracements, then the higher levels will are likely to come. So pivot levels again, pivot levels are the levels of resistance and supports. Pivot is nothing but the average of open high low of particular day or week or whatever the time period of the pivot is. So above that pivot, if stock closes above that pivot level, uh, resistance 1 and resistance 2, it might go towards that. Okay, if it closes below the pivot, support 1 and support 2 are likely to be tested. So there is no highlight here, but these are just a label you should keep in mind. And just for the target and stop loss, you can follow this. VWAP, volume weighted average prices. These are better from the average prices because this takes into consideration the volume also. So whenever the stock closes above any VWAP, this will indicate you a green signal, like a green highlight. And whenever stock closes above 50 below 50-day VWAP, it will show you a orange highlight. Okay. So peaks and bottoms is nothing but a high and low. If some stock is hitting a low, which is a low of 10, 20, 50 days low, this will highlight, or whatever, maybe a 10-day low also, it will only highlight 10-day. If it is all 10, 20, 50 days low, it will highlight. So you can understand how the strong or weak the counter is. Okay. Similarly, this stock has made a high. Today high was 10-day and 20 days high, but not 50 days high. Likewise. Okay. So gap. What are gaps? Gaps are nothing but when stock opens gaps up, open gap up or gap down, and the gap remains there. Okay. Now this gap theory says that whenever such gaps are left, they are sooner or later filled by the stock. Okay. Now whenever stock is near to this range, you need to consider, you need to uh, uh, have a like, you just need to remember that there was a gap and it might get filled up. Okay. So this is a 4 point gap. Okay. So if stock is coming near to this, there is a high chances of filling this gap. Like say if you take an example of Nifty in 2014 was has broken out and from 6800 odd levels, and after 1 year, 1.5 year, it came back to that level to fill the gap. There was a gap. Okay. So the time frame is not decided, but the gap will be filled. Okay, likely to be filled in the coming trading sessions. Okay. So but it is not sure if it will be tomorrow or day after tomorrow. It depends. Okay. It depends. So you this is just the last four gap up or gap down. I'll be providing here. There is no highlight here, but I'll be providing some highlight also. If the stock is near to this level, it will highlight this. Okay. So derivatives analysis and indication. So this is nothing but a crux of the option chain. Okay, what is happening in the option? This is all what we need to know. Okay. The first look at call base and put base. What is this? Call base is where the highest number of open contracts, open interest are is built up. Okay. Highest number of open call contracts is the highest call base, and put contracts is the put base. This is the basically a range for that particular expiry. And option max pain is nothing but it is one theory uh, which says that option the stock on expiry will close near to these levels. Okay. So there are two things: either this max pain level, if the stock is too far from this, let's say 1400, 1450, then the max pain will move upward or stock might move downward. Okay. So this is not some indication, but just a number where you can have an idea that how far the stock price is from max pain level. Okay. Put call ratio. Put call ratio, many of you might be knowing that uh, like what is this 0.84? What does this means? 0.84 means the put contracts are 0.84 times the call holders, call contracts. Okay. Okay. Means the put holders are less than the call. means more participants are holding call options. Okay, so that means there is a bullish sentiment in this counter, but not that strong bullish. Okay, point 0.9 point 0.9 to 1 is just neutral. Anything which you see below zero point 0.7 or 6 or zero point 0.5, that is where the sentiments are too bullish, and that are the overbought zone. Okay, and similarly if you see a number like 1.4, that means the put holders are 1.4 times the call, means there is a bearish sentiment. Okay, then you need to think like um, there is too much bearishness, and these are the levels of oversold and the bounce is very likely. Okay, so call addition subtraction, how you can how you can interpret this. Whenever stocks moves higher and if there is an addition on the very near to the very near call strike, let's say the stock price is 1300 and call 1300 call strike has seen the highest addition, that means the there is a stiff resistance of 1300 and the stock might see profit booking from these levels. On the other hand, if there is a subtraction on that level, that means whoever has done the shorting on that call options, call strike, are covering that. That means the short covering. Any See, you need to look at the price movement plus what is happened here. Both will tell you something. If the price moves high and there is a subtraction, that is a short covering. Price move high and there is addition to the nearest call option, call strike, that is a long unwinding. You can say it. Okay. And similarly, if stock is moving higher and there is an addition to the put uh, closest put option strike, that means the market is becoming more and more confident that the the stock will further move up. Okay, and similarly if there is a subtraction, means market participants are not that much confident and the base is weak. Okay, it might not sustain at that level. So this is what we understand from this. I have not made some highlights here, but I'll definitely try to bring some highlights if there are any if there can be any if there can be any indications. So I'll definitely try to do this so it will be easy to interpret. Yeah, so similarly this is the derivatives and option activity, whatever it is happening, it is shown in this section. Now coming to the candlesticks. Now these candlestick patterns, what are they? Bullish engulfing, bearish engulfing. So bullish, all these names, where they have come from. This is the Japanese candlestick pattern theory. Okay, so based on this, whenever they all these patterns are found, identified, so that comes into our filtered list. Okay, and the possible levels, upcoming levels are given based on these patterns. Okay, so you can explore these patterns. So that is again a wholly new topic to talk on these patterns. Okay, uh, if you want any insight to this pattern psychology, you can write to me, but in short you can understand that bullish engulfing means the previous day's open and close is covered by today's open and close, is more like the range of yesterday's open and close and is less than, and the or you can say today's open and close range is more than the previous day's open and close range, means the yesterday's selling was absorbed totally and there is a big buying today. That is a reversal day. Okay. So similarly, this kind of psychology I can make you understand separately. Like um, this you can explore. It is available freely. There, it's on the open source. It's not like something which I have identified. It's open. You can write us if you have any doubt how we have you know on how these are formed and or what are the psychology. If you don't get it from the open source, we are happy to answer you. Okay, so let's go to candlestick patterns and other indications. So this is the section where you will get all the calls as in indications, you can say. So let's say let's look at this 28th June at 2:57 it was giving a bullish harami. Okay, buy near this, top loss this, target this. The next on 2nd July the close was 260.6. Okay, so it has achieved the target. Here it is showing bearish harami, but see the strength. This accuracy is nothing, but it is calculated that whenever the pattern is formed from that closing, whether we have got 1% per return or not. So 56% of time when this pattern is formed, we have got 1%, means the strength of this indicator is low. You can either ignore this or you can find another uh, stock for trading. Okay, now similarly if you see on 4th July dragonfly doji, as the name suggests, dragonfly doji means a confusion between a buyer and seller, and dragonfly means uh, basically this kind of patterns are formed at the bottom or near to the bottom. This signifies that there was a huge sell-off, but at the end of the day bulls took the charge and closed very near to the open. And yeah, so there is there is a huge uptrend, or you might say a trend reversal is coming. So this is where it is formed. There is no possible labels we have identified, but this is where you can consider that there is a confusion and the trend might reverse from here. Okay, you again need to look at chart where it is formed. It might form in between. Okay, so you need to look at that. On 6th July 2018, you can see the bearish harami again 50, with the strength of 56%. Now here if you see there is there's another indication near breakout and bearish harami. So two indicators are contradicting each other. You just need to ignore such because there is some confusion. Okay, so if there is any contradictory call, you just ignore that. So actually it broke out, and this volatility call is based on the bands, Bollinger Bands, and based on the momentum, there is a complex calculation behind it, and so we have arrived on this. So yeah, so if you can see by about 265.7 and the target is 269, so we have achieved that. Now look, please carefully look at this. These 3 days it has given a top out indication. Now as I said, top out top out maybe may not be immediate top out, but it might take 2-3 days. Okay, and the accuracy is 84%, but so that you cannot just ignore this, but it is saying that this is near to top. Okay, now if you go ahead you'll see that actually it has formed the top and it has fallen. So this will indicate you, but you don't need to you have to think that if I'm long I need to book profits in this zone. I'll not suggest you to create a short, but at least you can book profits whenever you find this indicator. So likewise, see here bearish pattern with 74% strength, and stock has not followed this pattern and it has gone up. So here also it was sell. So suddenly 582 in 2 days. So these bearish signals were coming, okay, but this took almost 10 days to achieve this target, okay. So you have to then look at like where it has formed on the chart, okay. And if there is any, this volatility calls are basically given. If volatility call is sell, means it is the prices are below 20 days moving average of middle band of Bollinger Bands. And if there is a volatility call buy, that is means the prices are above middle band. So now here see, from 582 to 550, 560 odd levels, this was telling bottom out, bottom out, bottom out. Again there was a contradictory call here. This is bearish and this is bottom out. Just ignore, do nothing. But this was overall telling bottom out. This zone, again a bounce, zoom directly to 630. So likewise you need to see the trend where from the prices are coming from, what all patterns have formed. So likewise I have randomly picked these snapshots of calls. So there will be bottom out, volatility call, long leg doji, okay. So near breakout, okay. So near breakout also is some is an indicator. Sometimes breakout means also it might be on the upside or downside, okay. So but definitely there will be a movement, but maximum number of times it will give on the upside. But again uh, you need to look at chart where this breakout is, where this breakout indications are coming. Then you will be able to understand whether it will be a downside breakout or upside breakout, okay. So actually you see at these two levels there was a breakout and zoom 1356 on the upside, again top out and it came down. So likewise it will definitely work, okay. You just need to follow some rules for using this. Let's look at this at 1300, 1285, bottom out, again 1308, bearish engulfing, again down, bearish up. This didn't work. See the strength 69%, okay. And also the previous call was sell, this also sell, but this you need to see the anything above 80% is a good strength, I say, okay. Below 80% may not hold or it might take some time. So I'll suggest that rely on you can come up with your own rules of following some percentage above. So it's all depends on you how you use this, but this is what the indications will get here, okay. Over and above all these numbers you will able to see the chart below these numbers, and in the one page report we will have these numbers and charts and RSI. So the overall technical front research is given to you, okay, which with definitely some indications. So you need to know. Now you need to go through it and you can take the call. You can you can take your call based on these numbers. And yeah, so the list which we will be providing, you can filter out which on which stocks you need to trade. So let's see the report.